And our balance sheet growth strategy has been to bring that about through deposit growth rather than just going after assets and then borrowing from the interbank market. So our deposit growth was significantly higher than market. Of course, we have retained our lower cost advantage relative to the other banks as well as we do that. So we maintained our high spread, the difference between yield and cost of funds, and we grew faster than market. So that was one item on the revenue line. The other one, of course, we diversified our businesses to incorporate more fee and commission earnings. As you know that in the Pakistan banking industry, spreads are high, one of the highest in the world. And as a result, over the years, there has been an increased dependence on just lending as a means for supporting profitability. And that, of course, is not sustainable long term. And we decided last year that we were going to diversify out of just spread earnings and into fee earnings. And to that end, we opened up new businesses in new channels and new products, which were primarily going to earn us, sustainable fee earnings.
Some key examples?
One example is bank assurance. We have a large network, we have a large customer base, and we felt that bringing to them a product set that is generally under the umbrella of bank assurance would be very useful for the customer as well as for ourselves. We have also entered into providing investment products to our affluent customers. We have also launched mobile banking, and I think mobile banking covers not just the aspect of fee income, it also brings our costs down of delivery of products and services. So we are looking at IT and automation and electronic channels to be able to access more customers at a much cheaper cost. So that was some of the stuff that we did on the revenue side. On the cost side, we've certainly, we've spoken about the inflationary environment, which is one of the key challenges that the economy faces. And when you've got a large expense base, inflation itself can be, eating up most of your profitability and any growth that would otherwise come. So we've controlled our costs significantly, and that is how we have. And if you look at the numbers again, I think we've done a job perhaps better than the market averages. And consequently, we've been able to retain our profitability and actually grown while the rest of the industry has been dropping. So these are the key elements that we've.
What about human resources? Did you have to let go of a lot of people as well? Did you downsize?
No, we had no formal downsizing strategy. We did not. We have been looking at increasing our productivity and our efficiencies. So productivity increases in terms of what we expect for one person to do in his or her job on a day-to-day basis. That bar has been going up. So we've been looking at the same cost delivering more to us on the revenue line or on the productivity side. So that's been our key strategy. We have been looking at other industry benchmarks, like how many people per branch should we have, and how many, what is the per unit cost that we should be looking at, and through that focus, we've actually brought down those costs.
What about your systems in terms of managing your risk, in terms of who you will lend to now as opposed to who you used to lend to in the past? Has there been a paradigm shift there?
I think there are clearly lots of lessons that we have learned through this crisis, but I think this doesn't call for a paradigm shift. It just emphasizes and ensures that the good practices of the past continue, perhaps more strongly. And essentially what that means is that our credit analysis process should be sharp. We should be looking at customers who have a sustainable business model. We should be looking at industry segments that again have that kind of sustainability long term. As a result, our portfolio quality is or has been for years considered to be better than the market. Some people say we're more conservative, but I think we believe that we've been making the right choices in terms of building our portfolio, and that's holding us in good stead now.
Now coming to Emaar, obviously we spoke about this before. You said that you had a reputational dividend where you did slightly better than some of the other competitors in the development world. In an environment where businesses are scaling down or have lost growth and hence are not expanding in terms of building new office spaces or acquiring commercial real estate, and similarly in an environment where the kind of housing that you build is for the affluent people, it's for people who have wealth. Now, a lot of wealth has been eroded. If someone had a plot, the value went down. If someone invested in the stock markets here or anywhere else in the world, that came down. Even if you were a bond investor, you lost a lot of money. So your prime customer base has pretty much lost half of its wealth. How does Emaar come out of this?
Well, this has two folds. One is Emaar, the corporate Emaar, and one is Emaar Pakistan. We were able to foresee that a crisis could come at any time at the corporate level, and we started with diversification of our business. We rationalized our approach and diversified the business into education, hospitality, healthcare, financial services, and other businesses. Here in Emaar Pakistan, we also rationalized our approach by limiting or controlling our growth. We cut cost. We put a first priority, which is to meet customers, to meet our commitment to customers. If you have bought a unit from us, it is our duty to deliver this as committed to you. So this we did not take any measure to affect that part. The measures we took was, instead of going into new projects at this stage, we waited until the economic situation improves and until the market is ready for that. We did some restructuring internally here and at the head office. We eliminated some redundant jobs, not very many. It's not, I don't call it layoffs. We just eliminated few redundant jobs, and we multitasked the remaining jobs over the remaining staff that we have. And our staff are trained to take multitasking, and we were successful in doing that. We concentrated on the construction of the sold, like I said, of the sold units, and then but in order to do that, we had to construct other units that are unsold also. For example, to complete a village. To give you an example, if you have bought one villa in one of our Mirador villages in Canyon Views, and the rest of the villas around you are not sold, we had to complete them so that the whole village is ready for you to move in. So this is the additional.
This is the difference between Emaar and Pakistan, because in Pakistan what developers do is, if there are 300 units and 50 haven't paid up, the other 250 suffer as well.
Yeah.
Are you going to still complete your projects and then take the risk on your own book?
Yes, we have already handed over. In the midst of the crisis, we did our first handing over in Canyon Views to our very happy customers, and we managed to hand over a new village every 2 months. We're handing over a new village every 2 months. But we're doing this rationally. We're not expanding. Like we're building